Assalamu alaikum wa rahmatullahi wa barakatuh, and welcome to another episode of Investment Matters. I'm your host Adnan Bazir, and in tonight's lineup we'll be doing the investment market update with Abdul Rauf Hanslow. We'll then be doing the investment analysis with Abdul Aziz Davids, and then we'll continue our series on financial planning with Muhammad Jaffer. So do stay tuned as Abdul Rauf will be taking us through the investment market update. Shukran. Assalamu alaikum and welcome back to Investment Matters, as we'll be continuing with investment analysis with our guest in the studio, Abdul Aziz Davids from Kagiso Asset Management. He's the head of research at Kagiso Asset Management. And in tonight's discussion, we'll be doing the budget speech by Pravin Gordhan for 2013 and looking at the particular implications for investments from the budget speech, so to say. Assalamu alaikum, Abdul.
Wa alaikum salam wa rahmatullahi wa barakatuh, Adnan. It's been a while.
Yes,
assalamu alaikum
welcome back
to our viewers as well.
Wa alaikum salam. Abdul, we've seen probably a mixed feeling of discussions by Pravin Gordhan in the budget speech.
That's right.
And obviously with this particular focus on investments. I mean, we've seen a 2 to 3% GDP downsizing, as well as government spending in that way. I mean, let's maybe just start off from that point of view.
I think, shukran for that, Adnan. I think maybe just to take a step back and just say, what is the budget and why is it important?
Yeah, of course.
So the budget is basically, if you think of your household, many of our viewers are working people, etc. So they've got certain incomes, either from salaries or their businesses. And obviously they've got expenses that they need to meet every month as well. And what you typically find is that people need to budget, otherwise you run out of money at the end of the month. Or if you do run out of money, you need to know exactly what the quantum is of the money that you're short, so that you need to know what you need to borrow, for example. That's, in simple terms, is what a budget is all about. It's basically a summary of your income versus your expenditures. And then whatever is excess of your income is obviously savings, and what is short is basically what you need to borrow.
Yes.
So similarly, the national budget is exactly that as well. It's basically just much bigger numbers,
Of course.
but effectively it's a summary of government income, and they've got various sources of income. The biggest one is actually personal income tax. So that accounts for about 35% of total income for the government. Obviously, other taxes are company taxes. Companies pay income tax, for example. Then there's various other taxes like VAT, value-added tax, customs and excise duties, etc.
Yes.
So that is on the income side of the budget. On the expenditure side, government obviously have certain commitments that they need to make. The biggest one is actually education. So paying for schools, paying for salaries for teachers, for example. That is one of the biggest components of the budget. But then also other components like social welfare spending, spending on infrastructure in terms of roads, etc. And then also spending on other things like defense. And although defense has obviously come down significantly.
We've seen the incentives also for youth employment as well.
The jobs fund, effectively, as they call it. And clearly, the idea behind a lot of the expenditure is that, first of all, it's to cater for existing sort of demand in terms of making sure that you get the wheels of the economy turning, but then also trying to foster future economic growth.
Of course.
And that is critical if you look at certain aspects like infrastructure spending, for example. So government, if you look at post-1994, the first democratic elections, for example, there was a realization there's an acute need for infrastructure spending in South Africa. But unfortunately, it's taken us basically 20 odd years almost to progress on that. What is probably the most positive side from the budget for this year is that government is committed to significant infrastructure spending over the next 3 years, something to the tune of 800 billion rand. Now that is significant because, and how it affects our viewers and the economy, is that will have a trickle-down effect on the economy as well. What that means is that for every sort of rand that the government spent, it obviously is not just that rand that is spent, it's probably one job created. It's that job that's been created, obviously subsisting other people in a family, for example. So we see significant impacts from government spending, especially on infrastructure spending. However, what we have seen over the last couple of years is that a lot of the spending has been diverted away from infrastructure towards social welfare.
Yes.
Now, unfortunately, there is a clear need for social welfare spending in this country, given the huge income inequalities that we have. But the trend, unfortunately, has been to the detriment of the overall economy. For example, last year, there was something like 16 million recipients of social sort of grants, for example.
Yes.
That number is forecast to increase to 17.1 million recipients next year. So it means that out of a population of, say, 50 million people, you're looking at 30 to 35% of your population on social sort of grants, etc. If you look in contrast, we've got an official working population of about 5 million people.
Yes.
So that ratio is basically almost 3 to 1 in terms of people receiving social grants versus the working population. So clearly that is something that needs to be addressed longer term. But the overall positive is obviously the infrastructure spending, and how that affects our viewers is that obviously it will mean that it will lead to job creation and create future economic growth as well.
I mean, having that focus on infrastructure spending and sort of moving the focus away from, like you mentioned, social welfare, and we've also seen the government wage bill also have increased over the past 3 years.
That's right.
I mean, do you see that now as a focus to sort of generate the economic growth that we need to push up that number?
Definitely.
In terms of focusing now on infrastructure spending to sort of generate the economic activity?
Definitely. If you look at what's happening across the world, we know that a lot of European countries, the developed world, they're in the grips of sort of the aftermath of the global financial crisis. The one problem with having debt and too much debt, even for a government, is that that debt needs to create future economic growth for you.
Yes.
So ultimately what we want to see is that we're going more into borrowings. The deficit this year is something like 3% of the budget. And ultimately we want to see, or 3% of GDP, we would want to see a lot of the infrastructure spending leading to high economic growth in GDP, which ultimately benefit the entire economy as well.
I mean, you've mentioned also about the social welfare focus now sort of changing in terms of the landscape, so to say.
Yeah.
We see that Praveen also encourages savings, and particularly retirement savings,
That's a big
which
positive.
would basically answer to that
Yes.
social welfare dependency.
Yes, 100%. And obviously, the impact of that is that what is basically announced is a harmonization between retirement spending, the various provident funds, etc., and also increasing the percentages that people can contribute as well. And we see that having a big impact both in the investment markets, but also the wider economy as well.
I mean, just on conclusion, what could the viewers take out from the budget speech in terms of tax, investments, etc.?
Yeah. I think one of the big positives is that many of our viewers don't drink.
Yes.
So obviously the alcohol increase in terms of taxes is not affecting them. I think cigarettes is going up 60 cents. So unfortunately those viewers that are smoking, now is a good time to quit.
Yeah.
But obviously overall they're allowing for inflation. There's 7 billion rand, for example, that is basically tax relief in terms of what they call bracket creep because of the effects of inflation. So as a result, we'll see a lot more people not having to pay taxes, for example. That threshold is also increased as well. So I think overall, probably a very well-balanced budget, and hopefully, our viewers will feel the benefits of that in future years.
Shukran for that, Abdul. As we'll continue with our discussion on financial planning with Mohammed Jaffer after the break, so do stay tuned. Shukran. Assalamu alaikum and welcome back to Investment Matters, as we'll be continuing our discussion on financial planning with Mohammed Jaffer in the studio. He's the key individual from Mojaf Financial Services. Assalamu alaikum, Mohammed.
Wa alaikum salam, Adnan, to you and to our beloved viewers.
Wa alaikum salam, Mohammed. We looked, in our previous episodes, we touched on unit trust as an investment vehicle. I mean, ideally speaking, in terms of Kagiso asset management offering such type of investment vehicles. I mean, for an investor looking at the time horizon to be invested in a unit trust, is it good to say that it's a long-term investment view that you need to have with unit trust?
Yes, Adnan, I think you're 100% correct in saying that unit trust is a long-term investment. I know over the years 2002 to roughly mid 2007, I think people were spoiled during those years where people viewed unit trusts as a short-term investment because they could get the returns of 25, 36, in fact, even up to 42% at times.
Yes.
And people got spoiled with those kind of returns, and they then viewed unit trust as a short-term investment. But you're 100% correct in saying that unit trust is a long-term investment. And what we did in the previous program as well, we indicated the danger. We highlighted the danger in what we termed fund hopping,
Yes.
you know, and switching from one fund to another. It's very dangerous to do that. In fact, one of the investment companies did some research, and they came up with a conclusion over a 15-year period. Those investors that moved from one fund to another, switched from one fund to another, left almost 7% on the table, as we call it, by switching from one fund to another. Because what happens quite often is that people chase the top performers.
Yes.
And many a time, people would get into the top performer just before the peak of the fund.
Yes.
And now the fund starts dipping, and now they realize, but I've done the wrong thing, and then they want to take the money out again.
Yes.
And this is the type of thing that happens when people are not educated and don't understand how unit trust works. Now, unit trust we can categorize into different categories, Adnan. You have unit trust for the aggressive investor, then you have unit trust for the moderate investor, and then obviously you have unit trust for the conservative investor. Now, as we've indicated in, I think, a few programs back, that it's important that when you sit with your advisor, that your advisor determines your risk profile. Not only must he determine your risk profile, but he must also determine where in your investment cycle, life cycle are you.
Yes.
Because that also determines in which unit trust vehicle he or she will place you. Because not only do we have different categories, as I said, aggressive, moderate, or conservative, we also have different themes.
Mm.
We have, for argument's sake, we have general equity, we have income funds, we have, for argument's sake, like mining and resources, property unit trusts. Then you have, and the hot topic nowadays is offshore, going offshore. And in fact, we will talk a little bit on the importance of going offshore. Maybe I should just touch on it now. South Africa, over the last 10 years, the South African Johannesburg Stock Exchange has given our investors a fantastic run, very good returns, as you know, Adnan. We've had really sterling returns on the South African, on the Johannesburg Stock Exchange. And then there's a strong feel that going forward, the Johannesburg Stock Exchange, the South African market will not be able to give us those kind of returns that we got for the number of years. And there is a strong motivation that we should now take a fair percentage of our investment portfolio that's in unit trust into offshore markets.
Yes.
Because there are many markets, for instance, the European market, the American market, and then there is the BRICS countries that are offering fantastic opportunities, Adnan. So, and also the rand has got some play, has got some influence on your returns as well.
Course.
Now, those people that took their monies offshore when the rand was trading at 7 rand and even in the early 8 rands already have seen that benefit coming through into their portfolios. So, yet again, as I said, that's another category that there's strong motivation that we need to take some of our monies offshore as well.
Yeah.
Now, once you have now determined firstly your risk profile, then you need to, the advisor now needs to determine where in your life cycle or your investment cycle are you. Are you in the accumulation phase? This would typically run between the ages of 25 to 35, 45, in that range. And then you look at the consolidation phase, which would typically be from 45 to 60, 65. And then we talk of the retirement phase, which is obviously after the age of 60, 65. And unfortunately, many people, even today, have to work up to that point. But once you have determined now in which cycle you fall, the advisor then needs to look at what is it that we want to achieve during those periods. if it's in the accumulation phase, I would almost debate strongly that even if the person is a moderate investor and he is falling in the category of accumulation phase, I would say that that investor should rather go into an aggressive portfolio. The reason why I'm saying that, because you have many years to make up, if for argument's sake your portfolio, typically what happened in 2008, 2007, 2008, where we saw a market correction of about 46%. Now, if you are in your 20s or your 30s, there's no need to panic because you've got many years for that, the percentage that you've lost in your portfolio over that year to make that up over the next 3, 4, even 5 years. And we know that the market corrected itself within 2 years, when we saw the correction in 2005. So if you fall into if you are in the accumulation phase, I would strongly suggest that your advisor puts you into an aggressive portfolio. And then he needs to put the package together as to which unit trust themes is he going to place you in. And after, hopefully in the next program, we can continue with the themes that the advisor can use to place your unit trust in.
I mean, just before we end off, just looking at the investment theme, obviously the time horizon will also play a role in being in the accumulation phase, but based on your moderate sort of risk exposure, it should play a role in
absolutely. The time horizon that you've got is definitely, that's the reason why I'm saying that if you've got 15, 20, 30 years for a time window, why go into a moderate portfolio or a conservative portfolio? So yeah, that's the reason why I strongly believe that person should be placed into an aggressive portfolio.
Shukran for that, Mohammed, on our discussion on unit trust. Viewers, do join us again next week as we'll continue our discussion on financial planning. Assalamu alaikum wa rahmatullahi wa barakatuh.